Welcome to The Explainer. Today, we are really getting into the mindset that separates someone just speculating in the markets from a person who's building serious, long-term wealth. We're going to look at the psychological journey, the true cost of making just one bad decision, and the strategies that can actually lead to a peaceful and profitable career.
So let's kick things off with a question that gets right to the heart of it all. This comes from a real case study. Someone spent R300,000 on what they called a lustrous goal. But was it worth it? I mean, really? To figure that out, we have to look past the price tag and dig into the psychology that drives these big money decisions.
Every single person who works with money, whether they realize it or not, moves through three very distinct psychological seasons. And if you can understand what these seasons are, you unlock the secret to why some people build lasting wealth, while others just seem to get stuck spinning their wheels.
So think of a trader's career not as a straight line, but as this evolution. You start out in what's called the pre-money phase. This is all about hope, faith, and theory. But then you hit post-money. This is where the real work begins. It requires brutal self-honesty to build an actual verifiable track record. And the final goal? To get within money. That's the big leagues, the institutional phase where you're managing and scaling serious capital.
Okay, so with that framework in mind, let's circle back to our case study of Michael Britz, because his story is a perfect example of a trader who's kind of stuck right between that second and third season, where one single financial choice ended up having massive, massive consequences.
And here it is, the crux of the problem. That R300,000 could have been the very capital used to build that track record, to finally push into that within money phase. But instead, it got diverted. And it wasn't an investment in an asset or a business. It was spent on a short-term personal goal tied up with status. It is a classic trap of that post-money season.
The money was spent in 2 hits in late 2025. Now, the timing here is absolutely critical, because while this money was going out the door, the Johannesburg Stock Exchange was presenting some incredible opportunities for growth. This is where the whole idea of opportunity cost becomes painfully clear.
So, what did that R300,000 really cost? See, it's never just the number on the page. The true price is all the future value you give up. It's like the ghost of the wealth that could have been, haunting that one decision.
And this just lays it all out, doesn't it? Just look at these numbers. In less than 5 months, that R300,000 could have turned into nearly R400,000 just by putting it into a stable stock like Capitec Bank. Or it could have shot up to over R438,000 in a more volatile but rewarding play like Sibanye Stillwater. We're talking about a missed gain of up to R138,000. Gone.
Let's just focus on that for a second. A 31.7% return with Capitec. Now, this wasn't some crazy high-risk bet. We're talking about a blue-chip banking giant. This represents a solid foundational investment that was just left on the table.
And then you have the other side of the coin, a mind-boggling 46.1% potential return with Sibanye Stillwater. This just shows the incredible scale of the opportunity that was traded away for, what, a short-term thrill?
This whole situation just makes you think of that brilliant quote from strategist Michael Saylor. Having the money to do something doesn't automatically give you a green light. Real financial discipline is about making sure your actions line up with your long-term goals, not just what you can afford right now. It is all about playing the long game.
Okay, so the big question is, how do you steer clear of these kinds of traps? How do you build a career that's not just profitable but sustainable and, well, peaceful, as the source material puts it? The answer is you have to shift your entire philosophy.
The secret is to evolve. You move away from that frantic, high-stress world of day trading and speculation, and you embrace something called position trading. This means you are no longer chasing tiny little price jumps every day. Instead, you're investing in the fundamental, long-term growth of a company, holding on for months or even years.
And the secret weapon for position trading? It's the absolute magic of compounding, which you can see in this formula. Now don't worry, you don't need to be a math whiz here. The only thing you need to focus on is that little t for time. That is your superpower. The longer you let time work for you, the more explosive your growth becomes.
And when you make this shift, the benefits are, well, they're life-changing. I mean, think about it. You're not glued to a screen all day. You're cutting out all that emotional craziness that leads to dumb mistakes. You let dividends get reinvested, creating this incredible self-fueling engine that builds a bedrock portfolio for your future.
But in the end, this strategy is about so much more than just the numbers in your account. It's about building what the source calls a vertically integrated life, a life where your financial plan and your personal well-being are perfectly in sync.
And this, right here, is the blueprint. You basically build a financial fortress with two walls. Your work finances, that's your portfolio, are your offense, designed to grow and keep tough economic times away. But your personal finances, that's your defense, making sure your family is secure even if those tough times manage to break through. It's a powerful way to protect your entire life.
And that brings us full circle. The story of that R300,000 wasn't just about one person's mistake. It's a lesson for all of us. So before you make your next big financial decision, don't just ask, can I afford this? Ask yourself this. What is the true opportunity cost? What incredible future are you giving up for a temporary present? The answer to that question might just define your financial destiny.